What's up, everybody? Welcome to the Stocks channel. My name is Cory, and tonight's episode is going to be your daily stock market technical analysis update. We saw the stock market selling off across the board today. Is this finally the stock market correction that we've been waiting for, or is this just a minor correction before we continue to head higher? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on the SPY ETF, we did see a lot of volatility and a lot of selling today, and we did close down negative 2.44%, and that is a price action close below the 20 simple moving average, which in a bull market, we don't want to see that. We did get a gap down, so we do have a gap above, and that gap won't close until we get up to a price target of 383. We can see that we did get a little bit of a bounce off the low of the day, but we did close around 374, which is still well below the 20 simple moving average. So below the 20 simple moving average in a bull market, we don't want to spend a lot of time down here, and we don't want to start seeing 2 to 3 day closes below that level. There's still going to be the 50 EMA, which is still positive sloping and should still be a support level down around $369. However, you can see with a day like today that the 5 EMA is aggressively sloping to the negative side, and if we do get a 5 EMA cross below the 13 EMA, that will be a sign that we could be going into a short-term bear trend. Remember, when we get into a short-term bear trend, we want to get defensive because it means the stock market correction is likely here, and we don't want to be caught without enough cash as the stock market continues to trend downward. So right now, one day does not set a trend, but it is a warning sign to start paying attention to see if this is going to turn into something bigger. So from the high in the SPY around 384 to today's close, we are down around negative 2.6%. Normally, when we see selling like this, it could last for about 2 to 3 days, and we did see a little bit of selling yesterday, so go ahead and count this as day 2. That means we could see a little bit of follow through today, but when we see a big sell-off like today, we want to see what happens the next day to see if there's going to be a large volume of selling or if we're starting to bounce and cool off, and it looks like we're getting ready to start heading higher. So you can see the volume today was higher than average, but it's still not way out of the norm of what we've seen in the past on sell-offs like this before we continue to bounce and start heading higher. So this is definitely a warning sign that we need to respect, but it doesn't mean anything until we see follow through. Remember, in stock market corrections, you don't want to sell on support levels. There's always going to be a bounce in any correction, and if you want to get out, you want to get out on that bounce. You don't want to sell as the market's going lower. You want to sell when the market bounces and fails to form a higher high. So like I always say on the Stocks Channel Discord server, do not panic sell and do not sell on support levels. So we do see the SPY level coming into a small support level down here around 373, and this could easily reverse as early as tomorrow, and we could continue to trend higher. Remember, the 5 EMA has not crossed below the 13 EMA just yet, and right now we just have one price action close below the 20 simple moving average. If we get another price action close below the 20 simple moving average, or we go up to that level and we see the 20 simple moving average acting as resistance, that will be a big warning sign that we might want to start trimming out of this market and get ready for a deeper correction. So the number one support levels to pay attention to at this point in time is the 369 level on SPY, and the most important support level is down here around 365. If we start closing below 365, it means we could easily come down and close this gap at 358. And I do think a gap close at 358 could be a temporary bottom as we continue to trend higher in this market yet again. So in the short term on this market, we're still relatively bullish, but the price action is by far bearish. So we have a mixed bag on the technical picture for the SPY ETF because we have bearish price action, but we still have bullish trending. Remember, the bullish trending could reverse as early as tomorrow, and we could start seeing some bearish trending developing. As far as upside price targets go, watch that 20 simple moving average because we definitely don't want to see that level acting as resistance. That level is somewhere around $377. The bottom of this gap could also be resistance, which is around 380, and we do have the previous all-time high, which should have been a support level that could now act as a resistance at 381. So those are going to be your critical support and resistance levels that you want to pay attention to tomorrow. And the price action should tell us if we're going into a deeper correction or if this was just a short-term correction before we continue the uptrend. Next up is the Nasdaq 100 QQQs ETF, and we see the Nasdaq 100 looking a lot better than the S&P 500 because we do see the price action closing above support at 319. 319 was the previous all-time high, and that level did act as support for the QQQs ETF. We can see the low of the day did touch the 20 simple moving average, and we did close higher off of that level. So we did find much better support levels on the QQQs than we did on the S&P 500. So the tech sector is still looking stronger than the S&P 500, and it does look like the tech sector could still try to find support off 319 and continue to head higher. You can see that nothing has broken on this bullish trend yet, with the 5 EMA still well above the 13 EMA, and on the triple Q's ETF, it really just looks like we needed to cool off after this monster run up that we had here. And if I measure this from the low to the high, we did see a 5% run up in only 1 week. From the high to today's close on the low, we did drop about 2.65%. So we still have more gains than losses at this point, but we want to pay attention to that 20 simple moving average, and that support level is going to be somewhere around 317. Like I said with the S&P 500, you don't want to see the price action continuing to close below the 20 simple moving average in a bull market. There's still plenty of support below us if we do start breaking below the 20 simple moving average, and there is going to be a very strong support level on the triple Qs at $313. Of course, below that, we have the 50 EMA, which is right around 308. So remember, like I said with the S&P 500, if you want to get out of this market and you're in too deep right now, you don't want to try to sell on these support levels. You want to try to sell on the bounce, and that will be your time to exit this market. Looking at the volume, we could see that we did see an increase in volume, but zooming out here, it doesn't look that abnormal from the rest of the volume that we've been seeing as of late. So while this sell-off was painful, it's definitely not a huge volume sell-off just yet. That doesn't mean it can't turn into a huge volume sell-off, but we don't want to make any assumptions. We want to wait and watch the price action and see if there's going to be any follow-through with this selling going into tomorrow's day. So as far as resistance levels, look above at 321, which was the previous price target. We could find resistance around that level, but the most important resistance level to watch is going to be 326. That's also the bottom of the gap that opened, and that gap will close at a price target of 327. So 321 and 326 are the critical resistance levels you want to watch on the triple Q's ETF. There was some big earnings after hours in Apple and Facebook and Tesla, and those earnings reports could mean a lot for which direction this market wants to go heading into tomorrow's session. So keep watching that price action and watch to see which support levels and which resistance levels are going to hold up, because that is going to tell us a lot about whether or not this is going to be a deeper correction or not. Next up is the Dow Jones DIA ETF, and we see the Dow Jones holding up on that 50 EMA right around 302, and we did get a confirmation of support because we did bounce off that level and close higher for the day. You can see the Dow Jones is definitely going into some bearish trending with the 5 EMA crossing below the 13 and the 20. Right now, the Dow Jones looks like it's going to start picking up some bearish momentum, and the price action needs to hold above the 50 EMA to prevent this chart from turning more bearish. We do have a bearish trend in the short term, and the price action is looking bad, closing below the 20 simple moving average. The only benefit on the Dow is that we are holding up above a positive sloping 50 EMA. Next up is the ARKK ETF, and we did see the ARKK finding support at 135 and bouncing and closing higher above the 20 simple moving average. We can see the 5 EMA is negative sloping, and it does look like it's trying to get ready to cross below the 13 EMA, but it has not yet crossed. So on the ARKK ETF, we still do have bullish price action and bullish trending in the short term. And if we can start bouncing off of these levels and heading higher, this chart will still look bullish. So right now, the number one resistance levels to watch on the ARKK ETF are going to be 139 and 144. Support levels are down here at 137 and 135. And if we break below 135, it means we're likely heading back to the 50 EMA at 127. Next up is the VIX, which is a fear indicator. And the VIX is by far telling the most important story that we need to pay attention to. Remember, the VIX is a fear indicator, and we saw the VIX going up over 60% today and blasting through both of our resistance levels at 24.8 and up here at 28.7. So the VIX is definitely showing us that there is a ton of fear that entered the market today, and that could have triggered a lot of panic selling. So it's too soon to say if the VIX is just overreacting to the sell-off and we see way too much panicking going on, which is completely normal when we see a sell-off over 2 to 3%. But we really need to see the VIX follow through, and we need to see the VIX come back down, cool off, and test this resistance level at 28 and see if it's going to act as support as the VIX continues to head higher. Like I said, there was a lot of earnings that came up after the bell, and those could heavily influence what we see in the market going into tomorrow. If we are truly going into a secular bull market, the earnings reports are going to be very key. In a secular bull market, we need to see companies beating their earnings expectations and raising guidance. That is how you keep a secular bull market trending higher. The second we start to see big companies missing on earnings, we're going to continue to see the VIX spiking and heading higher, and we're going to see a lot of volatility re-entering this market as we go into a deep stock market correction. So right now, the VIX is firing off a warning signal, and we need to watch it very closely to see if it's just a one-day sell-off or if it's trying to tell us that we're heading towards a deeper stock market correction. Next up is the US dollar, and we see the dollar spiking up a little bit today and closing up above all of the moving averages except for that negative sloping 50 EMA, and it is still holding up below resistance at 90.6. So right now the dollar is still looking like it's in a long-term bear trend, but it is bouncing a little bit, and we need to continue to watch this resistance level and the 50 EMA to see if the dollar is going to hold up below these resistance levels, because the price action is going to be key here. The trend is definitely bearish in the long term, which means the dollar is likely heading down to $89, which is the next support level. So right now we need to continue to watch the dollar, because if we see strength in the dollar, it could mean that we're heading to a stock market correction in the short term. Next up is gold, and we saw gold having a volatile day, and it did look like it wanted to come back down and test support at 1826, but we never quite got there. It looks like gold is trending downward, and we're possibly going to retest the support at 1826. If we break and close below support, it means we could head much lower on gold. But if we bounce off that level, it means we're likely heading back to 1861. Remember, we still need to break and close over 1860 before we can head up to 1930. On silver, we also saw a lot of volatility today, but we did hold up above support at $25 and above the 50 EMA at $25.25. So silver is still holding up above support, and it does look like it still wants to try to come up here and test the price target at $26.58. Now, as far as silver goes, we need to hold up above this support level at $25, or it means we could head back down to the next support level lower at $23.80. On Bitcoin, we're still holding up over that 50 EMA, and you can see that Bitcoin is still in a consolidation cool-off correction period before it tries to head higher. The price target on Bitcoin is still up here at 42,700, and as long as the price action can hold up over the 50 EMA, we could start running towards that price target in the very near future. Next up is Amazon stock, and we did see Amazon barely closing over resistance yesterday, and we did get a gap up open, but it wasn't enough, and the sell-off got the better of Amazon, and we're all the way back down towards the support level at $3,200. It does look like Amazon is still in a bullish trend with all of the moving averages stacked to the bull side, and the price action is still over the 20 simple moving average. We do have Amazon's earnings coming up, and if it can maintain this bullish trend, it could continue to run into earnings. The most likely price targets on Amazon are going to be $3,300 and $3,400 if we can break and close over that first price target. Next up is Apple stock, and Apple was one of those companies that did have earnings after the bell, and we're going to wait to see what Apple does tomorrow, but it does have a bullish trend, and the price action is still holding up over the 5 EMA. As far as support goes on Apple, we could find support on top of the 5 EMA at 140, or we could come all the way back down and retest 136, test that level as support, and then continue to bounce higher and try to head back up to 145. So Apple is going to be key because it is a market moving stock. If Apple is going down, the rest of the market will likely continue to go into a correction, but if Apple can find a support level and start bouncing, it will likely bring the rest of the stock market higher with it. On the financial sector, we see some more price action heading lower, but we are looking like we're finding support right on top of the 50 EMA, which means we could start to bounce off of this level soon. The trending is looking bearish in the short term, but in the medium term, we still have a positive sloping 20 simple moving average and 50 EMA, which means this bull trend could just be cooling off before it continues to head higher. On the industrial sector, we're seeing the price action breaking below the 50 EMA, and we're back on top of a horizontal support line down here at $85. You can see the trending is picking up some bearish momentum, and it does look like the industrials are starting to weaken. On the healthcare sector, we saw the price action breaking down and closing below the 20 simple moving average, but we're still holding up above a positive sloping 50 EMA. You can see the 5 EMA does look like it's getting ready to cross below the 13 EMA, which means we're developing some bearish trending. So the price action is not looking great, and the trend is starting to show some bearish momentum on the healthcare sector. So going back to the S&P 500, this was definitely a day that we want to pay attention to, and tomorrow's trading session is going to be very critical. We see a lot of weakness in the sectors, and we saw a huge blow to the tech sector today, even though it is holding up above critical support levels. So tomorrow is going to be very key to see if we get any follow through in this selling, or if we start to see a bounce. Remember, even if we get a bounce, we need to watch those resistance levels and see if those are acting as strong resistance, which means we could see more selling as we continue to head lower. So this is definitely the time to be disciplined and have your cash positions ready, and be ready to buy much lower if we do start going into a deep correction. Remember to watch the critical support levels on SPY at 365, because if we break below that, it means we could be closing the gap at 358. Stock market corrections are nothing to be afraid of, and if you were prepared and you weren't being greedy and you have a cash position, think of a stock market correction as a great buying opportunity to get great stocks at much lower prices. On the Stocks Channel Discord, I'm constantly reminding you to have a cash position as the market heads higher, and if you're still looking for a disciplined and profitable trading community, come check us out at the Stocks Channel Discord. You can find out how to join by clicking on the link in the description of this video. Am I forgetting anything? Woo, it's getting hot in here. Welcome to Hot Stocks. How many of you clicked straight to the end of the video to see if there was going to be hot stocks on tonight's episode? Yeah, that's right. I know you did. All right, first up, we're looking at Tesla stock, and we did see Tesla going down negative 2.14%, and that is a price action close right on top of that 5 EMA. So remember, as long as the chart on Tesla is bullish, we're going to remain bullish on Tesla, and we still have all of these moving averages still trending to the bull side with positive slopes. However, it is still fully possible that Tesla is ready to complete this wave 5, which means it could be going into a short-term bear trend. However, we're not calling a top, and as long as this chart is bullish, I'm going to continue to raise my price targets on Tesla. So the next price target to watch for is 906, and we have yet to break and close over that level, which if we do break and close over 906, it means that Tesla could be heading up to 967. As far as support levels go, watch this 20 simple moving average, which is now at $810. That is going to be the most critical level for Tesla because if it starts closing below the 20 simple moving average, we're likely going to see the end of this run and we're going to see Tesla go into that correction. So Tesla did have earnings after the bell, which is normally a catalyst for stocks like Tesla. And we're going to see with tomorrow's trading day, is Tesla ready to continue to trend higher? Or are we finally going to complete wave 5 and start heading into that correction? Tesla is now in the S&P 500 and the Nasdaq 100 as well. So if it is going into a correction, that could also trigger that stock market correction that we were talking about in the beginning of this video. Next up is NEO stock, and we see NEO stock going down big today, going down negative 5.24% and sitting right on top of that 20 simple moving average. Just like I said with Tesla, we need to hold up over that 20 simple moving average if we want to remain bullish, and we need to maintain this bullish trend. If the 5 EMA does start crossing below the 13 EMA and or the price action closes below this 20 simple moving average, it could mean the end for NEO stock and we could be heading into that correction. There is going to be a support level at $55, which should be a very key level to watch for. If we close below 55 on NEO, it means we're likely heading much lower. As far as upside price targets on NEO, if we do bounce and find support and continue to trend higher, watch this $61 level and of course the $65 level. NEO stock is definitely looking weak as of late, but it is still in a fifth wave and it does have more upside as long as this chart remains bullish. Next up is Pltr stock, and we saw Pltr go in absolute beast mode today, going up 10.26% and blasting right through our price target at $36. So we'll go ahead and turn that resistance level into possible support, and the next price target to watch on Pltr is up here at $45. Pltr is going absolutely nuts lately, and you could see it's on huge volume. Normally, when you see big moves to the upside on large volume, that means it's the real deal move and you don't want to ignore it. So I think Pltr is extremely bullish and it's moving in a very impulsive way, which I love to see. So I'm fully expecting to see Pltr continue to try to blast through this price target at $45. Next up is Zoom stock, and I'm still very bullish on Zoom stock. Even though it has been cooling off, it's still holding up above that 20 simple moving average with a short-term bull trend. Look for Zoom to try to break through 390, which is a strong resistance level. And if we could break through 390, we should have no trouble getting back up to my price target at $418. Zoom is still one of those stocks that you want to load up on and you want to hold it for the long term. This is a stock that I'm bullish for in the long term. And if you want to trade it, you can sell it at these price targets, but it does have potential to go much higher. So look for Zoom to try to hold up above support at $365, and there's another very strong support level just below that at $360. Next up is CRM stock, and CRM is actually looking pretty good today, even though it did find resistance yet again at that 50 EMA. It's still closing above the 5 EMA as far as price action goes, and it still has a short-term bull trend. My price targets on CRM are still 232 and 238, and I think we're going to have no trouble getting to 238 in the very near future. We're really just cooling off and building up energy to blast through this resistance level before we continue to head higher on CRM. There will be a brand new hot stock next week, and I've already given it to my Discord members. So if you want brand new hot stocks daily on the ground level, consider checking us out at the Stocks Channel Discord. We're a disciplined and profitable trading community, and we're absolutely crushing this market. You can find out how to join by clicking on the link in the description of this video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.